Hey there, Ryan Ledden, President, Black Oak Asset Management. Want to jump into what the subject heading that you see above, keeping perspective in a noisy market. Obviously, it's been very, very noisy. So I wanted to send this video out just to provide maybe a little bit of clarity, a little bit of calmness to everyone, because it's hard to do sometimes when you see the market have a pullback last week on Thursday and Friday of what it did, and we may be more in store for this week. So there's a great article that I found that's going to be in the notes at the bottom of this email, but it sheds some light to me as well, because again, I've been doing this long enough. I've seen these things happen before. It may just be a different headline, but this one obviously at the forefront is the tariff discussion, and we can go down a rabbit hole of reasons for and against tariffs, and kind of a macroeconomic thing and how it dwindles down to a microeconomic thing. Not going to do this in this video, but again, you can read the article, and I suggest that you do it. I think it's a good article, but markets don't like uncertainty. And again, fill in the blank of what that term uncertainty means. And this one is tariffs. It's focusing on that. So it doesn't mean we're headed for a downturn. The U.S. market, in this article, it says imports are 14% of the U.S. GDP. That's kind of astounding that it's not more than that. So again, it doesn't necessarily mean what's going on with the macro economy when you have tariffs and headlines that come out. So volatility is normal. Volatility is up, volatility is down. Some people associate volatility with always going down. It could also mean going up as well. But usually after many pullbacks, there's great returns. Now, does that mean a week later, a month later, a year later? Sometimes we have to be patient with these things. But again, if you look at the historical line graphs, it's there, and all we can do is look backwards. We can't look forwards as far as what the markets are going to do, but we look backwards and we see these line graphs, and there's dips all the time. So again, that's our job, is to provide education on that. Again, the economy, the headlines, the media, our emotions, they like certainty. And right now we have some uncertainty right now. So again, article goes into more depth and detail on that, but you know what I'm going to say. Stay in the course. It works. Everybody's portfolio is different. Everyone has different market exposure. So some of you who are watching this, who are in retirement, your portfolios may not be as aggressively allocated as someone like my age, or in their 30s or 20s, who have a long runway of life as far as working goes, and we just keep saving and plowing forward. I'm looking where I can take advantage of this situation that we're in, and possibly put more money in. And other people that we have worked with, kudos to those who have sent emails out to us. We've had people say they want to put more in versus the opposite. So again, that's what we're here for. I hope this brings a little bit of clarity to you. If you want to discuss and talk about these things, that's what we are here for. Schedule some time and we can go through these things. But I wanted to at least provide a little bit of clarity. Just, stay calm. These things, it will, again, whether we agree or disagree on the whole tariff situation, that's a completely different story. But just, it's okay. But if you want to talk and walk through this, that is what we're here for, to provide that help and that education. So I wanted to send this out. Again, we may be headed for some more volatility, but again, stay the course. Just like Dave Ramsey says, the only people who get hurt on a roller coaster are those who jump off before it gets back to the station. So anyway, we're here for you. Give us a call, and we'll definitely talk through this.